I want to show you exactly how I would start my trading journey if I had to start over from zero. Literally zero. You do not need money to get started. What you need is a strategy. You need a system. And you need to learn how to win before you make money. By the time you finish this video, you will know how trading actually works, my exact tools that I would use if I was starting from scratch, my $0 practice system that I would run for 30 days, and the same exact high probability setup that I use in the markets. If you're already working a 9 to 5, you are already ahead of the majority of people out there. This is going to save you a lot of time, money, and stress while you focus on building something bigger. Let's get started with the foundation. Before we get into charts or any indicators, I want you to understand exactly what you're doing when you're trading. When you look at a chart, all you're seeing is human behavior, buying and selling in real time. When you see price begin to rise, that is because demand is greater than supply. When you see price fall, supply outweighs that demand. And that push-pull you see is what's called volatility. And volatility is opportunity. And don't get it twisted. Your job is not to capitalize on every single move. Your job is to find areas where the odds lean in your favor, define and know your risk, and follow a process that is repeatable across many setups. Most beginners try to be perfect and expect some astronomical return. What you actually need is to be consistent, not be perfect. All right, let's set up your tools. This is where your trading journey begins. The first platform that you're going to utilize is TradingView. All you have to do is create a free account on TradingView. Once you have your free account set up, we want to make sure that our chart is in candlestick view here. Then we are going to stick to the 5-minute time frame. Then we're going to add our two crucial indicators, RSI and MACD. And then last but not least, we're going to chart out our key support and resistance levels. We're going to work over here, grab our handy dandy tool here. We're going to hit this arrow and get our horizontal line. Then we're going to chart out our high resistance level of the day, our low. All right, now that we have our intraday high and low charted out, we're going to look for in between this price action to see where price reacts off of to either bounce to the upside or rejection to the downside. So as you can see here as well, I'm going to go back to use my same horizontal line tool. You can see right within open, we get an immediate rejection here at about 613.45. So we're going to chart this as a current key level here. Perfect. Move my line a little bit here to make it a little bit better. Fantastic. Then we're also going to draw out the same exact thing here at this, I would say about the 614.17 level. Perfect. Now, a lot of you guys might be asking, what exactly are these lines and why are they here? Well, these are known as support and resistance levels. And the important factor is this is exactly where we can anticipate price to have a reaction off of. Now, by a reaction, I mean either catching a bounce to the upside or getting rejected to the downside. Either or, just depending on the way price is trending. But having these key levels charted out here allows us to be able to anticipate a change of direction or a breakout structure before it happens. So market opens, we immediately see, we test our first resistance level and get a rejection here. We now know price is trending downward. If we had this level down here charted out, this 610.68 level, I know immediately off the rejection of this 613.47 level that we are trending back down to the downside, where I can expect downside pressure until we reach the 610.68 level where buyers are stepping in again. So you guys might be wondering, what exactly is a rejection? It's very simple. There's nothing to be overcomplicated here. All it means is price and sellers stepping in to send price downward after hitting a key level. So when price reaches this 613.47 level, there is a large amount of sellers at this level doing everything in their power to drive price downward. Once they have successfully done so and we get a candle close and continuation, that is a typical rejection off of a key level, which is also known as a resistance level. Same exact concept applies for support level. When we reach the support level, that is exactly where we are expecting buyers to step in and drive price upwards. So we see the same thing happen here. We reach the 610.68 level, immediately are able to catch a bounce and buyers send price aggressively to the upside. And for those of you guys who are unfamiliar with TradingView as it sits, let me get a quick breakdown of exactly what we're looking at. Over here on the right side, I have my watch list. Now I have this in a very strategic order. I trade QQQ. It's my number one thing that I trade. If it ain't broke, don't fix it. Now I have correlated underneath there, I have every single stock that is weighted in QQQ in order with the top 10 here. So as I'm making my trades, if I need to cycle through, I can cycle through very easily in order to understand exactly the movement of Qs. Now, of course, down here I have my indicators, RSI and MACD. Right underneath my actual underlying chart, these other charts you guys will see here, this is volume. This represents volume to see exactly how much buying and selling pressure we have. Always remember, bigger moves come from bigger volume. So if we see volume increase, that is a good sign. Over here on the left, I have a various set amount of tools that TradingView allows me to utilize, from drawing horizontal lines, paintbrush, and or add a text option. And of course here we have our ticker symbol, our time frames, and even some indicators and candlestick things that you can mess with as well. The number one thing that I want to make sure you guys are aware of is how to set up your TradingView effectively. That means setting up your indicators. When you want to add RSI and MACD, all you have to do is go over here and click on indicators, and you can type them in directly here. If I type in RSI, boom, you'll see it right there on the top. Same thing with MACD, boom, right there. Then if I close out of this, of course, we want to make sure our candlesticks are on candles, not anything else. Line, we want candles. On top of that, I want you guys to be familiar with these tools. The number one tool I use here is our horizontal line. This allows me to draw my key support and resistance level, which is literally my bread and butter money-making setup here. And then last but not least, be familiar with reading the chart here. We have orange box here is pre-market. The dark box here is actual market open, and this lightly blue pattern box is in after hours. Now, I know exactly what you guys are all wondering. I've shown you guys the tools. I've shown you guys exactly what you need to set up your charts. Now you guys are wondering, what is this high probability setup? What exactly am I looking for? Well, let's break it down, okay? Remember, we are on a 5-minute time frame here. So every single candle you see represents a 5-minute unit measurement in time. So this is exactly what we're waiting for. We always want to see price react off a level and show direction before entering. So my favorite bread and butter setup is allowing for either a rejection or bounce to form. Let one candle close in the direction, and on the continuation, enter. So we will actually take my trade example that I did this morning and show you guys in real time. So we have, of course, our 5-minute candles here. Our first 5-minute candle here gets rejected here. This is the first green candle pushing up that shows a little bit of rejection. But remember how we read candles. Green candles start here at the bottom and close on the top. Red candles start on the top and close at the bottom. So this candle opens up here at 612.76, pushes up to 613.45, and immediately closes at this level with a very small wick above this price action level. Then we get an immediate wick up on this candle. And the second that this candle prints red and continuates off of this previous candle, shows me this is a clean rejection. Basically a bearish engulfing candle here, where this red candle consumes the entire distance of the previous green candle. Then this is setting up my perfect setup. We have our first rejection point. We have our confirmation close here. Now all we're waiting for is continuation. The second that this 5-minute candle surpasses the previous low of the first rejection candle, that's my entry. So if you guys want to be able to emulate it in real time, you walk over here to your tools. We can click on short position. I will click right here, and it shows you in real time exactly an exact perfect replica of a trade here. So what you guys are seeing is my high probability setup, and the exact same trade I took this morning, entering here at 612.56 and writing it down to our support level here at 610.68. So on this is what we call a short position. In other words, in the options world, which is what I dabble in, this would be known as buying puts, going short on price. Price gets rejected, we are in a downward direction. We are betting on price to move downward. So we enter puts here, and we enter the 612 puts, writing it all the way down to 610.87 for a fantastic gain. And on the contrary to that position would be a call, or going long on a position. That would be in the contrary, where we think price is going to rise, so we would buy calls. And that would be if This candle, instead of printing red and closing below this area, would be if we printed green and closed below, I would then enter on the continuation past this, and I would have taken calls to the upside. Now, I'm sure all you guys are wondering, what gives me the confidence to be able to enter a short or long position so swiftly when I see the opportunity present itself? Well, where that confidence comes from is experience, and experience through blowing up accounts, losing thousands of dollars, taking positive trades and not understanding why, taking negative trades and not understanding why, and being able to see the market for 8 years consistently to understand exactly the way it moves. Now, before you understand strategy, we have to talk about something that most traders skip over. Losing a trade does not necessarily mean that you did something wrong. And making money on a random setup does not mean you did something right. The only thing that matters is how much you're risking when you're wrong, how much you're making when you're right, and whether the process is easy identifiable and repeatable. Let me give you a simple example. Say you were to risk $100 per trade. If your winning trades average $300 profit, and out of 10 trades, you were to only win 4. So you'd be losing 6. Those 4 wins have you up $1,200. And those 6 losses down $100 per loss. You would still be walking away profitable with almost $600, and you were wrong majority of the time. And that is exactly why Mind Over Market exists. This game is far more about emotional control than about being correct. Here's the core setup that I use. It's extremely simple and very repeatable. And most importantly, it teaches you structure instead of just guessing. I use 4 key components. MACD to spot momentum shifts within the market, RSI to identify overbought or oversold conditions, candle closures, waiting to allow a candle to close above or below support or resistance to dictate direction. Last but not least is support and resistance levels. Key price points in which price is likely to react either the upside or the downside. Here is an ideal long setup for you. RSI is extremely oversold. MACD is starting to cross over to the upside. We get a green breaker candle to the upside and close above resistance. And lastly, the next candle continues direction, and that's your sweet spot. That is a very high probability entry for myself. And here's the key part that most people won't tell you. Sometimes it still loses, and that's perfectly fine. Your risk is defined and your rules were followed. You move on, you journal it, and you take that lesson to the next. Next, let me tell you exactly how you can effectively practice without risking any of your own capital. And this is a beautiful feature called paper trading. What you need to do is go to charlesschwab.com, fill out an account information. Once you've been approved, you can download the Think or Swim trading platform directly from the Charles Schwab website. Once you have it opened up, you can access paper trading. And once you are in, you can place a bunch of simulated trades to not only practice these setups, get familiar with the market, get familiar with placing orders, and get familiar with how the market moves every single day without risking any of your own capital. The best part about paper trading is it tracks real-time data. So you are actually active in the market without having the risk, so you allow to learn at your own pace. If you are currently working a full-time job, this is the #1 way to be able to get reps in and gain experience. A session before work and a session after work. If you can't commit to practicing at least 1 hour a day, how do you expect to be able to even be profitable? You are able to learn the mechanics without the financial or emotional stress. Now, for my motivated viewers, I have a 30-day challenge for you guys. Everything we just learned will apply for the next 30 days. It is very important that you have tunnel vision with this exact strategy so you can build confidence and consistency utilizing it. Remember, you are going to be looking for setups with RSI either overbought or oversold. MACD crossing momentum in your favor, either oversold or overextended. Waiting for a candle to close above or below a key level and allowing the breaker candle to continue the trend direction. Try and take at least 1 to 2 practice setups every single market session. And no, I'm not telling you to take a trade every 5 minutes. I'm telling you to be patient and wait for every single thing to line up perfectly and then have confidence and take the trade. It is also very crucial that you log every single trade in a journal. And I don't mean just logging what you did. I mean, talk about the mindset, talk about what the market was doing, and most importantly, write down the emotions that you felt throughout the entire trade, from start to finish. For example, this is how I would do a journal entry. I would write the date the market was open, and I would write exactly what my plan was. My plan was to enter QQQ to the upside after a candle close above the 620 resistance level and allowed the breaker candle to continue direction. Once I wrote all that down, that's exactly how my play wrote out, and I would write that I was feeling emotionally confident and not greedy to take my profits because I followed my plan to an exact T. Lastly, make sure you're reviewing your sessions on a weekly time basis so you can consistently see the things that you're doing correctly, the things that you're doing incorrectly, and most importantly, where you're at for the week so you know what to build on for the following. If you follow these rules, you will learn how often you actually stick to your own rules, how often your setup really works, and most importantly, how to control your emotions. This is exactly the type of guide that I wish I had when I got started. That is exactly why I built my program, Mind Over Market, where I personally handhold you through the process of learning this system, whether it's coming from a little experience or no experience, because I remember what it was like to be a beginner. All I wanted to do was be able to talk through and ask somebody that I was confident that knew the right answers and that I could trust. And boom, Mind Over Market was born. Now, here's what I want for you. Don't rush. Do not gamble. Make sure you are building the skill set first, then we can scale. I will talk to you guys soon. Let's get to work.